Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, we're taking a look at engulfing candlesticks. There is both the bullish and the bearish versions, and basically it's a two candlestick pattern, although only one of them is technically the bullish or bearish engulfing candlestick. And what I mean by that is you might be, for example, in an uptrend where, we've been kind of grinding higher, and then all of a sudden you get a candlestick like this that is very negative, and it engulfs the previous one. Its length is bigger. It swallows the entire previous candlestick. That is a bearish engulfing candlestick. Because if you think about it, it shows that you gapped higher and then you just fell. Or you may have gapped lower, rallied, and pulled back and kind of banged back and forth, but you closed at the bottom. There is the bullish engulfing candlestick, which is, as I'm sure you would imagine, is just the exact opposite. You're in a downtrend, then one day this happens. Now, you have to use a little bit of artistic license in 24-hour markets sometimes. So that's something to pay attention to, like in Forex. It's more often used in stock trading on a daily chart, but it can be translated into Forex, and I'll show you here in a minute what I mean. So take a look at U.S. steel. We'd been rallying. We pulled back, and then we rallied again, and then the market just kind of failed to continue. Look at this candlestick here. We gapped higher, rallied, and then fell apart. We swallowed the entire candlestick previously. The only thing that makes this a better engulfing candlestick is if we closed way down at the bottom. But this is still a bearish engulfing candlestick. And on a breakdown below the bottom of the candlestick, that shows negative momentum. You put your stop loss on the other side, and then off you go. You can see that U.S. steel broke apart at that point, even though you had a day before the breakdown. So I mentioned that Forex doesn't necessarily have these things because, you can have them at the open of business for the week, but that's the only time it closes. So really at this point, you have to use a little bit of artistic endeavor. This candlestick here, we broke down pretty significantly, and then we shot straight up in the air. On a break above the top of this candlestick, which would have actually got you in here, and you pulled back a bit before taking off, your stop loss is down here. Now, this is the hourly chart, but it would be the same thing with the daily candlestick. Like I said, you don't get gaps in the Forex market very often. And here in Monero, we did get a little bit of a gap on an hourly chart. We gapped up a little bit higher and then broke down rather drastically. As you can see, the market then proceeded to fall apart underneath it and go much lower. Your stop loss on a break of this candlestick was up here, never came close to touching it. Pretty significant move.